Their entry would have been as soon as that candle closed. Their stop loss would have been just below the last low. And now they have different target levels, which is over here. And they have another target level over here. And then you can see they've got the target level all the way here at the top. So this would have been their take profit levels as they were looking to catch this buy trade. Hello guys and girls and welcome back. It's your boy Big John. The at's at the bottom of the screen if you like to listen to my music. So is all the relevant information I'll be speaking about in this video. And today what I'm going to be doing is showing you a very quick and simple, very sweet method on how you can scalp using the 5-minute time frame. Now we are going to be doing our analysis on the daily time frame, but it's going to be very, very simple and people will be able to figure out how they're going to be able to catch multiple entries on the 5-minute time frame and even an entry if they do miss the first one that does appear. So with all that being said, guys and girls, if you do want to get into the one-time fee VIP group, then please just watch the video that's linked above. It's got all the information in there about the VIP group and I'm sure you're going to love that one. If you want to get into any of my other services, then also just join the Discord group and there's always a message that goes out every couple of hours that tells you about the services I offer. Now with all of that being said, guys and girls, let's get straight into the video.
Started from the bottom like Drake. Got that young moolah, but I learned my mistakes. Climbing up the ladder, gotta watch out for the snakes. If you wanna be the boss, then you have to delegate. Okay. So we're back on TradingView, and you do know if you want to get any coins off your monthly payments on TradingView, then just make sure you click on the link below in the description, and you will get some coins towards your monthly payment that will make it a discounted rate. Now, right now on TradingView, we are on gold, we are on the daily chart, and our first thing to do is just do the analysis of the previous day's candle. Now, a lot of people are probably aware of the daily highs and the daily lows. I'm sure you've heard of that type of trading before if you have been trading long enough. If not, then you can come and learn something new today. What we're going to do is just go and get a horizontal tool and we're just going to draw the previous day's high and the previous day's low. Now, there are indicators that can do this as well. I'm sure you can just literally find any out there. Just type daily high and low, you'll find the indicator. And what we're going to pay attention to here is what I've explained to people before about the 4 phases in the market. So basically we have a phase in the market which is this, which is basically just consolidation, and then the market can push up for an advancing, and then it can consolidate up here again, right, like this, and then it can push back down. Now this is what they call the 4 phases in the market. So we have consolidation, which is accumulation distribution. We also have the advancing phase, and then we have accumulation distribution here, which is one of the 2 phases, and then we have the declining phase. So that's 4 phases in the market, accumulation and distribution being 2 of the 4 phases. What we are paying attention to here is we want to be trading the accumulation or distribution phase as the consolidation phase. We want to only be trading the market when the market is bouncing off of highs and lows, so therefore it gives us the best entries for buy trades or sell trades when it comes to scalping. And what we want to pay attention to here is we want to make sure that we are not trading when the market is breaking these highs and lows and starts to trend. That is not what we want to do. We do not want to be trading like this. We want to make sure we are trading only inside this range. So the next thing we do is go down to the 5-minute time frame, and you can do this on the 15-minute time frame as well, but we will be using the 5-minute time frame. And now you can see I've marked out my high and my low. If you want to, you could just change your high color to a red just so you can tell the difference. And then the next thing we're going to do here is just mark out where Friday actually stopped, because it is Monday today. So Friday session stopped around about here. You can just go to your settings, appearances over here, and you can just go to sessions and it will mark out the session for you already, just like this. I'm only looking to take my trade when price action either comes to this support level or comes to this resistance level. So now we can see that price action has pushed itself down to the support level. The next thing I'm going to be looking for is my break of structure. And if you're not aware of what I'm talking about when the market breaks structure, I've done a whole 30-minute course video and the link for that will be in the description below. So right over here, I can see there's a break of structure on the 5-minute time frame. And when there's a break of structure like this, you can be 2 types of traders. You could be either a breakout trader or you could be a breakout and a retest trader, and I will show you a retest trade later on. So we can see this one broke out straight away, and for all my breakout traders, they would have been doing something like this. Their entry would have been as soon as that candle closed, their stop loss would have been just below the last low, and now they have different target levels, which is over here, and they have another target level over here.
and then you can see they've got the target level all the way here at the top. So this would have been their take profit levels as they were looking to catch this buy trade. Altogether, we can see that the market did push all the way up there. Now, my honest advice is it's better to trade from the highs or from the lows, because when you are trading in the middle, which is all this region here, there is a possibility that price action could just pull back down to this low and then buy back up off of this level. So you will just get stopped out of your trade. Even if you don't do that, again, trading is probabilities and it's all based on your risk management, and there is no problem with actually trading in between these points. You just have to be aware of that. So when we go over to the next area that possibly gave us an entry, we are looking at over here. We can see the market created a level here, and then we see our breakout at this point here. If we did enter on the close of this candle here, we would have been stopped out by this candle over here, because we can see where the last low was, the market actually just spiked that level and would have taken us out where our stop loss is, unless we gave it a little bit more pips than just below this low area here. Now, the next area for us to catch the breakout in the market would have been over here, but we can see that the market did form a level of structure right down here as well. As the market was selling off at this level and we was waiting for a buyback up, now we would have seen that another level of structure did form here, because we can see that the market sold down, bought up, pushed down again, and created a lower high right over here. So therefore, we would have been able to get in as soon as the market broke out from this area here. Now, when the market broke out from this area, if you wanted to be more safe, you can see there was a breakout here and there was a breakout candle again, but this candle also went down a little bit more for a retest on that line. And now, because it gave us that confluence, we would have been able to get into the market right here, and then our stop loss could have just been below this low here or even below this line over here. Now, there was a trade you could see that goes up to here, but if you put your stop loss just below this line, you would have got taken out over here in the market. So I personally like to always put my stop loss below the last low that I could see very clear. So if your stop loss was just below this level, again, you would have been able to catch this trade all the way up to this level here. And you can see that even if you missed this entry, there was another entry that did appear here in the market. Yes, you might have got in on this breakout. You would have lost this trade because your stop loss would have been here and this candle would have taken you out. But now if you move yourself over to what formed next, which would have been up here, the market pulled up and pulled back down again, and the market gave you another lower high from this area here. So when the market broke out from this candle, this is where your last possible entry for this buy would have been, going all the way up to the top right up there. Now we can see the same type of thing happening here for the sell. The market came back down, broke structure at this level here with this candle here, and let's just pay attention to that. So we can see right here the market broke this structure right over here, and then we would have been looking for our entry of our sell straight away on this candle. And again, where would we have been targeting? We would have been targeting the low just like this. So we got in right over here. Our stop loss would have been just above this level here or just above the high, and we would have been targeting our low right down here. You can see, and even if you missed that entry over there, there was another possible entry when the market broke structure here. You could have got in on the retest over here with a stop loss just above this level here, even just above here or above there. Completely up to you how you want to do this. Remember, the smaller your stop loss is, you have a low risk but high reward type setup, or you could easily use the same risk and just be still losing less money, so you have more probabilities. I call them extra lives, being able to come into the market again and trade the probabilities when it comes to forex. Now we can see again over here the same thing happened. We had a level of structure right here, it was broken, and you could have got in right over here, stop loss above this level here or above the last high, and then you would have been able to take this sell trade back down to this level here. So guys and girls, you can pretty much get the gist of what I'm talking about, and you have to pay attention to the way you trade. Remember, you are only trading the mean reversion type trading is when price action is bouncing off of the highs and lows, and the daily highs and lows is a great way for you to be able to suss this out. You can trade this on absolutely any pair, and you can go and back test it yourself. Remember, you are not trading when the market is trending. You are looking for the market to be bouncing off of the highs and the lows. So preferably it needs to at least bounce off the high or the low at least once, so you can see that on the next day you have the possibility of getting a entry just like this and just like that. And with all that being said, guys and girls, don't forget to like, comment, share, subscribe. If you do want to get into my VIP group where I'm explaining things like this all the time to my students in my Sunday Zoom calls where we go over analysis and I teach them new things about the market, then make sure you hit me up in Discord, or you use one of the links below, and then you still hit me up in Discord or Telegram and tell me that you've made payment. Right now, it's your boy Big John, and I hope you love this information, and I'm out. Peace.
Started from the bottom like Drake. Got that young moolah, but I learned my mistakes. Climbing up the ladder, gotta watch out for the snakes. If you wanna be the boss, then you have to delegate.